My friends, welcome back. For those of you interested in fundamental analysis, today is going to be a special day. I was recently invited to Denison University's investment club to speak to their students on talking about a case study of a company that I'm investing in. I'm going to walk through the fundamental, the macro, and the stock-specific considerations of Spotify, one of the most controversial names in the market today. And so with that said, we're going to dive straight into it. But before we do, if you're new to my channel, make sure to subscribe because you're going to get a lot of value out of this. And with that said, let's do it. In 3, 2, 1, let's go. All right, welcome everybody. And it's my pleasure to be here at Denison University's Investment Club. And today I'm going to be walking you through a case study of how to analyze a company. Specifically, we're going to be talking about Spotify. So this is a name that a lot of you should be familiar with, but we're going to dive deeper into the economics of the company, understand what drives this company's stock, and we'll see where it's going to go from here. So today's agenda, I'm going to be spending anywhere between 35 and 45 minutes really walking everybody through the fundamentals, the macro, and the stock's opportunity. We're going to dive deep and really share some insights into understanding this company and the business model as a whole. I'll first give a quick intro about me, and then we're going to dive right into it. So let's just give a quick introduction of who I am so that you guys know and feel connected to me today. My name is Larry Chung, and I'm going to describe my bio really in two ways. Rather than like a blurb of what I do professionally, I'm going to talk about what I do on the internet and what I do off the internet. So on the internet, I am a YouTube investment strategist, and my channel has over 50,000 subscribers. And on my channel, I talk about equity research, macro strategy, and also portfolio allocation. I'll talk about that later. I'm also a creator on Patreon, where I've created an investment community to share the behind the scenes equity research, company specific strategy, and stock selection for members. And I'm also a Seeking Alpha contributor. Now, off the internet, I'm a small business owner of a company called Tigerway, and we're like a regional market player in educational consulting. But I'll talk about that later today. For now, I'm going to share some philosophy before we start. So here are some points for you to remember today and for your future. I've taken some quotes from really famous investors and hope that you take away some of these investing principles, not just for this very moment, but also in how you approach investing in the future. So we have major investors here: Peter Lynch, Charlie Munger, Warren Buffett, and John Bogle. And I just wanted to share with you some of their perspectives so that you can become a better investor. Number one is make sure that you invest in what you know and understand. Number two is the big money is not really in buying or selling, but in the waiting. In other words, having that long-term time frame. Number three is don't try to predict the future, prepare for it. Nobody knows exactly what is going to happen, but having a plan allows you for the best chance at survival. And then number four is time is your friend and impulse is your enemy. And what that means is patience is one of the most powerful assets in investing. In other words, patience sometimes can be even more important than intelligence. Okay, so I just wanted to share this before I got started, because the stock that I am talking about today is not for the faint of heart. It's a growth stock. And that means that growth stocks, they have growing pains. The peaks are sharper and the valleys are deeper. And Spotify actually just reported earnings last night. And this was a screenshot of the post-market action today. Actually, it's down a little bit further, and we'll discuss that. But the stock that I'm talking about today, Spotify, it is not for the faint of heart. So this philosophy that I'm sharing with you is going to be especially applicable if you are going to be buying companies that have great volatility. Now, they recently released their earnings, and I know that not everybody here has a finance background. So if you are not familiar with all these metrics, don't worry, I'll walk everybody through this. But usually, I just want to give you a quick heads up. When a company releases earnings, that company's stock typically adjusts on the upside or the downside significantly because of the forward forecast and expectations. So I'll talk about all of this along with their earnings outcome towards the end of today, okay? All right, so I'm going to give you a quick overview of Spotify so that you understand what their business does behind what you may already know. So Spotify, as you know, is the platform where you and I listen to music from our favorite artists. You and I already know that. That's basic. But moving forward, you're going to see that Spotify has a big strategic shift, not just in music, but also moving towards podcasting. And so in case you're interested in this company, you might want to note that Spotify right now has about a 1/3 global market share within music streaming, and they're also one of the leaders in podcasting, just followed by Apple. I'm going to give you a quick summary, and it's that two of their major services include music and podcasts. And the way their business model works is they distribute the music from the 3 record labels that control the majority of the market. We're talking about Universal, Warner, and Sony. And then they resell that music through either a paid subscription, as you know, it's called Spotify Premium, or the free ad-supported version. And as of the latest quarter, they have 406 million monthly active users, which on the street, they call it MAUs. You want to be familiar with that term. And then 180 million of these monthly active subscribers are paid premium subscribers. So the street really focuses on these global metrics from Spotify. So this was the current quarter, okay? And this was last quarter. And you can see just some quick math that they increased their paid subscribers by about 8 million. And they increased their monthly active users by 25 million. And so what the street is going to look for is they're going to look at how quickly is Spotify growing premium subscribers and how quickly are they growing monthly active users? Because this is the figure that eventually funnels into paid subscription. So if this number is not growing, then this number here is going to flatten out. You want to understand that relationship. So I'm going to show you some internal drivers of Spotify, help you understand the business model so that you can understand where this company is going. So here's a quick snapshot. And this is a pretty important but basic pie chart here. You're going to see that over the last couple of years, the premium membership at Spotify consisted of roughly 90% of revenues. So it's a very concentrated bet in the past on just premium music subscribers. And 10% was really generated from ads. Today, ads is 15% and premium membership is 85%. And you're going to see that as that shift, takes more of a hold in ad-supported revenue, the street is going to start assessing the company's future in a different way. So I'm going to walk you guys all through that. Don't worry. You can see here that this is their pricing table. And if you were to subscribe to Spotify Premium today, there are several plans. At the individual level, the dual level, the family level, and the student level, most of their users are on their free plan. And you can see that the users on their free plan, they get delivered ads. And those are the users that contribute to 10% of their revenue. But the percentage of the users that are premium, they contribute to the majority of the revenues. And we'll talk about that later today. So we want to understand also, how does Spotify compete with the rest of the market? Competition is very important to understand. Who can offer what Spotify also offers? And in the market today, there are several competitors. One is Apple Music. Another one is YouTube Music, also Google Play, Pandora to a lesser extent, and another company called Tidal. And you want to note that in general, the more competition that Spotify has, the slower that they're going to be able to grow their monthly active users. The fewer the competitors they have, the less friction that they have in growing their market share and growing their monthly active users. So competition and their growth needs to be balanced with one another. Now, let's take a look at the funnel in terms of how their business model funnels from the registered users down to the monthly active users and then to premium subscribers. So
Spotify is a pretty well-known brand. They've got a lot of scale, and they rely on word of mouth. They rely on partners, also paid marketing across Facebook and Google. And the users that sign up eventually become engaged. So you can see here that monthly active users are engaged users. These are users that stream quite a bit of music from Spotify each month. And one of the things that you want to consider in the funnel is the more engaged the users, the more likely they are to become premium subscribers. So one insightful way to think about Spotify is not just through monthly active users. It's not just through number of subscribers, but it's also number of hours streamed. Think about that for a second. The greater the number of hours streamed and the greater the number of podcasts streamed, which I'll talk about later today, the more engagement that they have, and therefore the stronger their conversion to the premium subscribers, which now is currently 85% of their revenue. So we can see here that we have a chart of the number of Spotify's monthly active users going back from 2015, and now this was the latest quarter, Q3 2021. Last night, Spotify released Q4 2021, and you can see that Spotify's trajectory has been very positive. Their latest figure, I believe, was 406. Okay, their latest figure was 406. I'm just going to write that in here because this website hasn't updated yet. But you can see that that growth trajectory continues to be solid. So if you are interested in a career in investments, when we think about this chart, we think about what could continue to drive this to the upside. And we want to think about what could stop Spotify's growth from continuing on its path. So we have several different factors to consider because forecasting is the name of the game when it comes to understanding monthly active users. Now, you can see here that in conjunction with the increase in monthly active users, premium subscribers are also proportional. And it's very important for Spotify to not just keep the upward momentum going, but keep the slope, the percentage change, and the growth rate to be the same. Because it's not enough for Spotify to just grow quarter over quarter. It's important for them to keep the growth momentum, because if they don't, then the street will be disappointed in their forecast and potentially revalue their valuation multiple. Now let's talk about the environment where Spotify competes. Spotify competes for really two things: the user attention to convert to premium, and they're also starting to compete in the ad spend market, mostly against companies at the second tier level, like Twitter, Snapchat, and Pinterest. Spotify is not directly trying to compete with Facebook or Google. They don't have enough resources to do so, but they are trying to compete at the second tier. So here's another metric that you want to follow. The more time that is streamed on Spotify, the more ads that can be delivered. So it's not just, like I said, about monthly active users, and it's not just about paid subscription. It's also about streamed hours, okay, and engagement metrics. Because if these engagement metrics are strong and their streamed hours are high, then Spotify has a metric called average revenue per user, ARPU, short for ARPU. And if the average revenue per user is high, that means that Spotify's profitability is also going to be greater, which will positively impact the stock price. So then we ask a few questions. Who competes for attention in the music or podcast space? And who are the advertising players in the market? Those are the macro questions that we want to ask when assessing the competition. And so earlier I talked about how Spotify competes with Apple, Amazon Music, and YouTube Music. And you can see that because Spotify is making a very concentrated bet in this area, they have a market leadership position. They have a market leadership position. Now, what you also want to note, though, is while they are in a leadership position, it's about how closely our competitors going to catch up. And soon I'm going to show you some pie charts of their market share that is starting to be slowly eaten away by big competitors like Apple and Amazon and YouTube. And I'm going to walk you through that so that you can see why Spotify's stock price is so volatile. In fact, as an analyst, you want to know this big picture understanding. As Spotify's market share slows down and maybe even decreases, their ability to grow monthly active users becomes more difficult, and therefore their ability to convert into paid subscribers also become a little bit more difficult. So you want to understand that dynamic from the macro level all the way down to their user engagement levels. So now let's talk about the advertising opportunity on Spotify. So as we know, in a couple of years ago, the ad-supported segment was less than 10%. So the slide that I was showing everybody up over here was this was a slide made in 2019. And back in 2019, you can see that premium revenue was around 90%, 89.98, close enough, and ad-supported revenue was 10%. A couple years later to today, you can see that the mix is starting to shift. The mix now is that ad-supported revenue is roughly 15%. So that means that if they can continue to grow that part of the business, Spotify now has what is called another catalyst in the making. So let's understand that a little bit more deeply. There was a Wall Street Journal piece discussed late last year titled "Spotify Kicks Off Campaign to Win More Subscribers." And in this article, it talked about how Spotify really wants to compete with Snapchat and Twitter on the advertising space. And they want to do that not just through music, but through podcasts, because that part of the ad revenue is increasing very quickly. So here's the podcasting opportunity that Spotify has. There are really two major leaders in podcasting today. One is Apple and one is Spotify. And Spotify has some really exclusive podcasters that join their platform and attracts a lot of listeners every single month. One example is Joe Rogan. We'll talk about him later today. He's quite a bit of a controversial figure. We'll discuss what it means to have really popular but controversial figures on your platform. But first, I want to walk you through the macro of understanding the podcast market. You can see that throughout the last couple of years and the forecast into the next couple of years, the trend for podcasts is relatively positive. And that means that if Spotify continues their leadership position in podcasts, and this market is growing in general, that means that their ability to grow the ad-supported segment of their business is going to be greater. So I want you to be able to tie all of these metrics along each other. And if I'm speaking a little fast because I have so much information to cover, please make sure to ask me towards the end. I'm happy to answer anything that you might have, okay? Now, taking a look at the next slide, we move from the macro podcast landscape down to how Spotify competes within the podcast landscape. Now, we can see that Spotify is outpacing Apple in terms of podcast listeners. 2021 was a pivotal year for Spotify, and going forward, the forecast is that Spotify is going to outpace Apple in this area. You can see that Spotify's podcast listeners are continuing to grow, and as a part of the population, it's marginally increasing as well. So as long as the macro outlook from podcast listeners is positive and it's increasing, and Spotify's ability to maintain its leadership position is still there, then that means that their strategy to grow the podcast division and grow their ad-supported revenue segment is very likely to continue increasing to the revenue pie. Now, here's another demographic graph that I want to show you. And it has to do with monthly podcast listeners by age. And you can see that even though this data is as of 2020, you can see that it's the age group of 12 to 34 where most people are listening to the podcast. 35 to 54 is still a large number, but it's not as high as the younger crowd. And certainly older women and older gentlemen, they're not listening to podcasts as much as young folks. So you can see that Spotify also happens to have the largest base of users aged 16 to 34. If we look at that part of the chart and we combine it with this observation, we can see that in podcasts, think about the logic here, most of the listeners are young, okay? Most of them are 12 to 34, and most of the 12 to 34 users are on Spotify. So that means Spotify is uniquely positioned to grow its podcasting business in a way that will allow them to continue its leadership position. Now, within the advertising space, Spotify is aiming to compete with Snapchat. You can see here, these are a couple examples of Snapchat ads. They're also aiming to compete with Twitter. And the way Spotify advertises is they have several formats. One is audio ads. You've probably seen some of these ads if you use Spotify as a user. They also have video ads. These are ads that can't really be skipped or interrupted. And they also have podcast ads. So think about the macro landscape that I've been walking you through so far. We think about it this way. The outlook for podcasts is positive. We can see that Spotify has eclipsed Apple users in podcast listeners. Their user growth continues to increase among podcast listeners. And they also have the best demographic inside podcast listeners. And so you can see that that's one of their solutions to grow their ad-supported revenue business. Time will tell whether that's going to be successful or not, but I'm painting the landscape for you to help you understand the bigger picture in which they compete, okay? All right, and of course, they also do custom experiences, but in my opinion, that's a smaller part of their business. Now I wanna show you some really important market share data, because this will help you really see the big picture and understand the tailwinds, which is a fancy term for factors that help the business, and then challenges, which, as you know, are factors that hurt the business, okay? So I wanna walk you through this really important big picture chart here. If we think about what Spotify is as a company, it's a audio streaming business. It's not just music, it's an audio streaming business because they do music and they also do podcasts and they do ads, okay, served through music and through podcasts. So who is their big competitor besides Apple Music, besides Amazon Music, besides YouTube Music? Their big competitor is the ad spend on radio, traditional radio. And the fancy term for traditional radio is called terrestrial radio. And as of right now, globally, 60% of ad spend still happens on traditional radio. But you can see in the chart on the left, that figure is going to decrease over time. And it's going to be reallocated into streaming audio, which is where Spotify, Apple Music, YouTube Music, and Amazon Music competes. So you can see that the macro trend for radio is going to decline. It's going to decline. But the macro trend for podcasts, the macro trend for audio streaming is going to increase. In other words, Spotify is competing in a growing space and not a shrinking space. They're going to benefit from radio ad spending declining over time. That's a major pillar that you want to understand. Now, another major piece of information that you want to understand is Spotify's market share. And I want to show you data from 2019 to 2021, and the latest information publicly available is Q2. And one of the reasons Spotify's stock price is so volatile, and one of the reasons it's so difficult for analysts to predict how much money they're going to make revenue-wise and profit-wise, is their market share is constantly changing. And these are one of the structural challenges that Spotify has. Take a look here. Back in 2019, Spotify had a 36% market share by music subscribers. By Q1 2021, that number had fallen to 32%. Now, to be fair, the market has gotten bigger, but their slice of the market has gotten smaller. You want to understand that. The market has gotten bigger, but their slice of the market has gotten smaller. And as of Q2 2021, Spotify is now at 31% for market share. So this is the overall market, okay? These numbers here, total subscribers, worldwide, 304 back in 2019, 487 by Q1 2021, 524 approximately by Q2 2021. So the market has gotten a lot bigger, but their slice is now really starting to get entrenched by really serious competitors, such as the other ones on the screen. And I'm going to note for you here. So media research is a really good source when it comes to understanding the global music industry. And I agree with this assessment that there's really no risk of Spotify losing its leading position anytime soon, but the erosion of its share, it's pretty clear. It's pretty clear. So what that also means is if Spotify is losing some market share, you want to know where is that share going to? Because in this market, there are going to be winners and there are also going to be losers. If there are some companies that are losing, you want to find out which companies are winning. So we can see here that several other companies like YouTube Music, Tencent Music, they're making big progress against Spotify. Those are really important companies to study. So one way, if you want to deepen your analyst skills, is to think about, okay, Spotify's market share went from 36, okay, to 31. That share went to, let's say, NetEase, YouTube Music, let's say Tencent Music. What are they doing? What are they doing about it? Okay, so what are they doing about it? Meaning, what is Spotify doing about it? And more specifically, what are their competitors doing such that they're able to take market share away? You want to understand that corporate strategy and how they're competing against one another. Okay, all right, cool. So yes, Yandex, Tencent Music, NetEase, they all account for 20% of the subscriber market share, but they're driving a lot of the subscriber growth over the 12 months leading into Q2 2021, meaning that China is a very, very big market that Spotify for now is not really able to penetrate very deeply. If you see news that Spotify is able to penetrate deeply into China or Asia, that would be very good news for the company. But as of right now, you can see that the momentum is shifting towards Yandex, Tencent Music, NetEase, whereas Spotify continues to rely heavily on North America, Europe, and Latin America. Okay, now let's talk about some controversy. This is important. And earlier I talked about how Spotify has some really important figures at their platform, like Joe Rogan. And these figures, they have a lot of loyal monthly active listeners. And of course, whenever they say things that are controversial, such as their opinions on COVID-19 or vaccination, that could draw a lot of confusion among its users. And so that was addressed on the earnings call last night. Fortunately for the company, it's too early to tell if the controversy will have an impact on subscribers. But that is an important point to follow, because when you have someone on the platform as large as Joe Rogan, you want to make sure that people aren't dropping off the platform if he's saying things that are controversial. Now, I want to walk through the technical stuff really, really lightly. I know that not everybody has a background in finance, so I'm not going to really go too deep into the financials. But what you want to pay attention to, big picture, not just for Spotify, but any company that you're studying or investing in, is you always want to take a look at top line, gross profit. These other points are very important, related to their cost structure, and more importantly, their EPS, okay? EPS meaning earnings per share. You want to make sure that the trends are going in the right direction. I'm not going to get too technical into this because I know that not everyone has a background, but in general, I want to share some principles. It's that if revenue growth is strong, if gross profit is strong, if EPS is strong and it's trending higher in the right direction, you're going to have the company do relatively well. And of course, you want to make sure that the company does not have significant debt that can limit its ability to really pursue its growth initiatives. So when we look at the balance sheet, for some of you who are a little bit deeper into finance and accounting, you want to make sure that its current assets really at least level with its current payables and debt. Because if the company has too much leverage and not enough cash on its balance sheet, they will be unable to really pursue the growth that they want in order to compete in the markets that they want, okay? But this is something for your accounting class. And today, my mission is to show you the macro landscape, understand the company, and things like that. Now, diving into a little bit deeper, if you are interested in investing in companies, every company will have an annual filing, a quarterly filing, and they will always include risk factors. And these risk factors are areas that you always want to read about. So these risk factors help you understand that what causes the financial performance to change is Spotify's ability to attract and retain users, understanding churn, and being able to predict and recommend the right songs. Because if you don't recommend the right songs, then you don't have the engagement to drive that premium membership. I'm not going to go through every single bullet point here, but the point is you want to focus on the risk factors that the company faces. Every company that you invest in, you want to study that. Okay, understand the competition. I've gone through that pretty much in detail today, and also understand its segments. So today we've talked about the premium membership business, which is now 85% of their revenue, and also their ad-supported business, which is 15% of their revenue today. When you study companies, you want to really dive into how they are generating traffic and clients for that specific segment so that you can know whether that segment has a lot more potential into the future. And of course, follow industry conferences from sell-side banks to help you understand where the company is going and the important metrics to follow. Now I want to talk about something really important, and that relates to the outlook. The outlook is very important, especially in today's investing environment. After every quarter, a company is going to share its outlook for its future. And this is going to create expectations. Once you set expectations, you have to meet or beat them. So here was the outlook provided, okay? Here is the outlook provided from last quarter. So last quarter, the outlook provided was that monthly active users would be 400 to 407, that premium subscribers would be this range, revenue would be this range, gross margin would be this range, and the operating profit would be this range. So that was the expectation that Spotify gave Wall Street. That was the expectation. What actually happened last night was the following. You can see that Spotify grew monthly active subscribers to 406 million. So at the upper end of the range, so I'll call that UR, at the upper end of the range, they grew the premium subscribers to 180, also at the upper end of the range. They grew revenue, I don't know if I have the revenue, they grew revenue to 2.6 billion euros, and that's also at the upper end of the range. So from a quick glance, their report last night was not bad, Where they fell a little short was the following. They had a new outlook, and their new outlook was that next quarter, they're going to generate 418 monthly active users, 183 million premium subs, and 2.6 billion. Now you can see the street's expectations were the following. This was their forecast. The street wanted to see a forecast of 422. They're forecasting 183 million, but the street wanted to see 185. So you can see that there's about a 1% variance, okay, in what they are forecasting and what the street wanted. But in this environment where the economy is slowing, even a slight miss is enough to send the company down 10, 15, even 20%. So like I said, Spotify is not for the faint of heart. You want to make sure that you understand nearly all areas of its business. Otherwise, you might get caught off guard. So another important data point that the company provides is total monthly active users by region, premium subs by region. So when we think about the pie charts, I know I'm going a little quickly here, but watch this. Here is where their users come from. North America, Europe, rest of the world, Latin America. But here is where their premium subscribers come from: North America, Europe, rest of the world, Latin America, meaning that they need to continue to do well here and here because that's where most of their revenue comes from. So they need to continue competing in North America, competing in Europe, because if they don't, rest of the world and Latin America, even though that's where a lot of their listeners come from, that's not the regions where most of them are paying for subscriptions. So you want to understand that relationship. Cool. All right. So what do we do with Spotify here, right? We're talking about the actionable items. I think I'm going to talk about this for another 5-7 minutes, and then we'll go to Q&A. These are the frameworks that I coach on YouTube and in my Patreon investment community. We ask some really key questions. This is really important. I encourage you to write this down. Yes, you're going to have a recording of it later. Reese's going to, give you guys a copy of this recording, but I want you to write it down right now. What is the macro direction of the market right now? What themes are currently preferred by the market? What theme does this company fall in? And do you like this company's story along with its theme? So here is the macro direction of the market right now. Short term, the market is very cautious. You've seen the volatility lately. It's been, the tone has been very cautious. Long term though, the US economy is still relatively unstable footing. So the outlook is still okay. Now, what current themes are preferred by the market right now? High quality growth, reasonable valuation. What theme does this company fall in? And I know that this is where it gets really subjective, and this is where you might have a different opinion. But Spotify is a company that grows 20% revenue every single year. They have a gross margin profile of about 25%. Their ads business is growing rapidly. They're a diversified company in terms of geographic users. So I would classify Spotify's growth as relatively high quality. And for those of you who are a little bit more into finance, Spotify trades at 3 times sales, which for a growth company is not necessarily too expensive. So does this company's story align with the theme in the market? I think this company is not a bad choice in today's market, but there are some considerations that I've talked about today. The company has $3.6 billion in cash equivalents. And they've got about $1.3 billion in long-term debt, $600 million in short-term payables. So here's the conclusion for the accounting majors and finance majors who really care about the financial profile. This cash balance is not bad, and it covers its obligations, but it doesn't leave the company with much to really compete with Snapchat or Twitter. It's enough to keep going, but it's not enough to do M&A and really take over the market. So we want to understand accounting at that level. And at the macro landscape, investors are cautious because the Fed's going to hike 3 times this year, and that's going to make interest expensive debt more expensive. And because, Spotify does have a reasonable amount of debt on their balance sheet, it's going to get more expensive if they decide to finance more. So that's important. So you have to consider that in conjunction with its current valuation. This valuation multiple is reasonable when the company is growing at 20%, 25% gross margins, and they've got a segment that's 15% and growing the ad supported. But now you have to think about, does it make sense in terms of the macro, and does it make sense in terms of their competition? Now, high valuation stocks right now is out of favor. So you have to ask yourself, is Spotify a high valuation stock? I personally don't think that Spotify is a high valuation stock, but there are other people in the market who do. So whether you make that decision or not, that is where there's a little bit of subjectivity into it. So I repeat, don't focus on just the price, focus on your investment process that allows you to reduce emotions and focus on research. So now let me share with you what I'm doing personally and what we're doing in my inner circle on Patreon. Let me show you. So for every name you choose, you can buy, obviously, you can sell or hold. Here is what I've been doing. We've been talking about Spotify in my inner circle. And we are talking about Spotify as a hold. We haven't talked about it as a buy. We haven't talked about it as a sell either. It's a hold. And the reasons we think that is its valuation in this market today is reasonable given its profile. And also what you want to note is that because there is a reset in expectations, it's possible that in future quarters, the company can beat and raise guidance again. Now, some things that you want to be aware of when it comes to the bear case is that the high growth themes is not really in favor right now. That's very important. And you also want to pay attention to the podcast division. If that area of the business slows, so will the overall appetite for Spotify stock. Here are some of the bright side points. Here are some of the dark side points. I talked about how a lot of their figures came in at the upper end of guidance, but their next quarter outlook it still fell short. And Wall Street right now is not very accepting of companies that fall short of expectations, especially companies that don't have the financial strength to compete with big tech. So I want to talk about how to position in this market really quickly, and then we're going to go to Q&A. So this is a note that I sent to my inner circle. As you know, this earnings season has been really, really heavy. All of FANG has reported: Facebook, Amazon, Apple, Netflix, and Google. And this was a note that I shared with my community, and it was this. It's that this market, they care about companies that have very large total addressable markets, lower debt levels, leadership positions, and promising segment growth. You want to write that down. If you're investing in the market today, that's how you want to be positioned. Very important. And I told my members that this is a list that I like. We're talking about Microsoft, AMD, Adobe, Google, Lam Research, Tencent. And I talked about this pre-earnings. And as you know, Microsoft's done well, AMD's done well, Adobe hasn't reported yet, Google's done well, Lam's done pretty well, Tencent hasn't reported yet. So these are the names that I've been telling people that we should, really favor. I hold Facebook too. Facebook's not doing so well. I hold Spotify too. But you have to recognize you're going to win some and you're going to lose some. Very important, okay? And then of course I offer, themes in terms of like how to position in this market, like month over month. Now, definitely follow my work publicly if you're interested in, what we talked about today on YouTube. This is my handle, Larry Chung, CFA. You can find me on YouTube. I try to post every week. I'm going to try to post this presentation on YouTube so that you guys can rewatch it. I'll even timestamp it so that you guys can skip to the right parts and revisit information if you want. And aspiring analysts can join my investment community if there's interest. About 15 to 18% of my investment community are college students. We've got college students from the Northeast, from the Midwest. We have a couple of students from the UC schools in California as well. This is a link to my Patreon, and I'll talk about that with you guys if you guys have questions in the Q&A. So some other investment clubs have reached out to me directly in terms of becoming like a research provider. If there's any interest in that, talk to me. I can talk to Nick about that. And of course, special thanks to Nick for inviting me today. And if you guys have questions, I want to make sure that you've got any questions addressed. If there are people who are interested in joining my research efforts, I am looking to potentially hire part-time analyst interns later this year in the fourth quarter of this year, or potentially early in 2023. So for those of you who enjoyed my thought process, enjoyed my macro research, equity research, you like what I do, you want to become a part of what I do, on the staff side, I am looking at potentially hiring later this year, early next. And for those of you who are interested in benefiting from my research as an equity analyst or as an investment analyst, definitely check out my Patreon because you can see that pricing is universally very affordable. So with that said, I'm going to lead it off to Q&A. I've covered a lot today, and I will post this on YouTube, timestamp everything, make sure that you guys can rewatch it if you want. And if you guys have questions, you can always ask in the comments section on YouTube, and I'll be there actively helping you guys out. Cool. All right, so I'm going to take any questions and make sure that if you've got a question, I answer it.
Jordan, I see you raised your hand. If you want to go
Yeah,
for it.
I did. Thank you again, Larry, for coming. I just wanted to ask if you could give some sources for the data, or like the earnings reports, or where I can find those, I guess, for some of the slides you had up there.
Sure. So is there a slide in particular that you're looking for, or just
Market shares? How would you find data based on that?
market share is over here. Here's the source. So Google global streaming music subscription market by media, MIDIA. And then you'll be able to find it.
Can you do that for like any industry? And this is a super basic question. I'm sorry.
No, that's a good question. Every question is a good question. I would say that some industries don't have it publicly available. Okay. This one happens to have it publicly available.
Okay. All right. Thank you.
Absolutely.
I also have a question, Larry.
Go ahead.
Larry, thank you for coming once again. But also, so how long have you had Spotify on your watch list? Like, how long have you had it on your watch list?
I've been holding Spotify for nearly 9 months now.
So
9 months.
9 months. That means in those months where like everything was high, I mean, basically anybody could make returns on investments. How did your thinking or like your mindset on Spotify as a holding thing change from then till now? Because now, like you said, high growth things are high growth investments are being, scrutinized. How often do you always revise your decision? Like, how often do you change?
So
I'm sure you had a different pitch deck then, like a different approach then, if you did. Like, I'm saying, like, obviously then things were different. Now things are different. Like, how often does an analyst have to keep going through that whole process of, looking at the macroeconomic conditions and then doing all that?
I would say every time the Fed speaks. If I want to put it in one sentence. Because unless the Fed speaks, there's really no change in the macro environment. Price is noise. We move on two things: fundamental earnings and Fed macro news. And last I checked, Spotify's fundamental positioning is relatively strong. They can't compete with Google and Facebook. I'm not saying that they can. They don't have the liquidity to do so. But are they growing in the right areas with the right macro direction? Yes, they are. But the Fed, excuse me, the Fed, because they are looking to raise at least 3 times this year, that is going to be a headwind for Spotify. So all of the volatility that you see in Spotify is caused by macro changes. So let me see if I can pull up that chart here. Fundamentally speaking, the company's quite solid. It's that high growth is out of favor right now. And the Fed, I can't find that chart right away, but the Fed meets 7 times every year. And so that means we have 7 opportunities to reevaluate our outlook. Most of the time, the Fed doesn't make any substantial changes to their outlook. There was a substantial hawkish tilt back in November, and that's when things started to change. So we do not revisit our opinion every time the stock goes up or down 10%. That's not what investors do. At least that's not what professionals do. Professionals evaluate information and update their conclusion if facts have changed. We don't consider price changes as facts. We consider that as movement of demand and supply and demand.
Thank you.
I think that was really well said. I guess I can jump in with another question. And thank you again, Larry, for the presentation. It was really awesome. If you're sort of pitching this sort of analysis approach at someone who's more of a novice or who's new, I noticed you talked a lot about revenue and revenue analysis and revenue forecasting. Do you think that's always a good place to start with the majority of companies that a novice investor might look at? Finding what drives revenue and starting as that as your sort of base for your forecast?
That's a good question. Let me bring you to the slide here that will really help you. So here's how I would answer this question. If you're interested in finding a profitable stock opportunity, do not start at the company level. You want to start at the macro level. the direction of the market. And here's why. Here's why. If there's a company that you're studying, Facebook or Google, Amazon or Netflix, but the direction of the market right now is weak, it's down. Every rally is getting faded. Every sell-off is getting more intense. It doesn't matter if you pick the best company. It really doesn't. Everything's going to go down, right? So if you want to make sure that you're picking a stock that's profitable, start with the macro direction. Where is the S&P's trend? Where is the NASDAQ's trend? And then the next thing that I would encourage people to look at is what themes are in the market right now. So some themes that are playing out in the market include the EV trade, the FANG trade, the high growth trade, which is the Cathie Wood trade, essentially, the Chinese internet trade, the Alibaba Tencent story, and then the consumer defensives and value value stocks. So then you ask, what theme does this company fall in? So for instance, Spotify, right? So Spotify, I would place it in high growth. Okay, I would put it in reasonable valuation. That's where I would put this company. And then from there, after you've determined its theme, then decide, okay, how is this company's revenue growth? The question that you asked at the beginning, how is this company's revenue growth profile in conjunction with the theme in the market? So for instance, Netflix is high growth, so is Spotify, so is PayPal. Which one of these companies then has the best profile inside that theme? That's how you want to think about stock selection in this market. Don't just start at the company level, because if you start at the company level and you ignore the macro, and you think, okay, this is a great company, this is a great price, it could be a great price, it could be a great company, but if the market is going down, you won't be able to escape that. Same thing. If you're studying a company that's not that great fundamentally, but the market is rising, that company will also benefit as well.
Okay, so you would say having a good analyst skills involve having a good balance between looking at the macro direction of the market as well as where the company falls into that macro spectrum.
Yes.
Okay.
It's important to have an understanding of where the macro direction is, because if you've got the best tech stocks in your portfolio, the best companies that have high revenue growth, really solid profit margins, manage their cost structure really well, innovative products, but the NASDAQ and the S&P are in a downtrend, you won't be able to escape that, and then vice versa.
Thank you.
I don't have a huge finance background, but kind of to harp on that. So would you look at companies with beta values closer to 1? In that case, if you're looking at like a full market perspective, like if you're picking, so like you're picking and choosing what company.
Could you repeat your question? I'm not sure I heard it. Okay.
Yeah, I'm sorry. So by that logic, like if you're looking at macro level instead of company level, like looking at S&P and NASDAQ, would you recommend looking at stocks if you were going to pick and choose that are closer to like a beta value of 1?
That's a good question. I would say that the beta depends on your risk tolerance. The beta depends on how much risk you're willing to take. And for you guys, where you're college students, you're still very young, I would encourage you, if you have the right risk appetite, to have a beta of at least 1. It doesn't make sense for you to have a portfolio where the beta is less than 1, because you guys are going to live for a long time. And if you have a beta that's less than 1 and the bull market continues, then you're going to see a lot of drag compared to the index. So I would say that for the average college investor, you should aim for at least a beta of 1. And if you're more risk tolerant, then a beta higher than 1 for sure.
Great, thank you.
Hey Larry, I have a question for you. For your Spotify pitch. So do you think Spotify will eventually become like an advertisement driven company, or like a subscription driven business?
Well, its premium membership is a subscription business already. And as of the latest quarter, ads are 15% of total revenue. A few quarters ago, it was 10%. So in terms of the pie, Spotify is definitely going to be increasing its ads business over time compared to premium. So if we forecast out a couple quarters from here, it's very likely that this will grow relative to the pie. So the answer, I hope that answers your question. They already have a subscription business. Their subscription business is the premium, is their premium model right here. That is their subscription. That right there.
Yeah, I understand. Yeah. So what I'm asking is, you think like Spotify will become more of like YouTube? It's more of like advertisement driven for revenue, or like a Netflix, which the subscription brings a lot of money.
Meaning advertisement?
No. The premium for Netflix.
So you're asking, is this part of the pie chart going to grow? Is that your question?
Yes.
I would say the subscription part of the business in the future is going to grow in terms of absolute size, but as a percentage of revenue, I think it's going to shrink. So I think ads is going to grow and the premium subscription is going to shrink.
Okay. Thank you.
Hey Larry, I have a question for you.
I'm just going to grab some tea. If you give me 1 second, be right back, okay? Yes, go ahead. And is your name is Mono?
Yeah, I go by Mono.
All right, Mono.
So, hi Larry, thank you for your presentation. It was awesome. So my question is, as an analyst, if you look at the macroeconomic event, what factor are you looking at? And like, which factor should you follow like daily in order to update your conclusion, you know?
Yeah, great question. Follow the inflation, CPI, follow core PCE inflation, follow the jobs number, follow the Fed funds rate, and then follow the balance, the Fed's sorry, I'm spelling that wrong. Follow the Fed's balance sheet size. I would focus on those 5 factors: inflation, CPI, core PCE inflation, the jobs number, the Fed funds rate, and balance sheet size. And if I were to add a 6th, also look at the unemployment rate. But I would say that this is somewhat less important. So that's like, you know, these are the top 5, and then number 6 is like another point of consideration.
Thank you.
Mm-hmm. And I'll tell you why. I'll tell you why you want to focus on that, because when this number, sorry, when this number is very high, the Fed has to move this Fed funds rate higher and potentially has to reduce the balance sheet. And what that's going to do to Spotify's multiple, for example, their valuation, is it's going to compress the valuation. So as these values get bigger, Fed funds rate is also going to have to get bigger, right? Balance sheet is going to have to get reduced. Valuation for companies is going to get compressed. That's the relationship. At this moment, things will change quarter over quarter, but as of this very moment, that's how I am assessing the market.
So if things change quarter over quarter, how would you, you have more experience than us, but how like a new analyst like figure out those changes, like how they string along as they change?
When the situation changes, you're going to have to reassess what are the Fed's priorities, and then look historically as to how those policies have impacted the market. So history is a very powerful guide, right? History is a very powerful guide. What I'm telling you here isn't necessarily novel. It's not necessarily new. This has happened for quite a long time throughout history. Yes, we're in 2022, but this same story, it played out the last several times the Fed decided to raise rates as well. So there was a taper tantrum back in 2017, right? There was a taper tantrum during that period of time when Chairman Ben Bernanke wanted to raise rates. The market wasn't ready for it. S&P fell 10%. And then when the Fed started, telling them, okay, we're going to take our time on rates, then the market rallied. Same thing happened this time, right? You can see that in the latest January FOMC, the Fed said that they're going to make decisions when they come. And he's not prescribing any specific roadmap just yet. He's making sure that people are really trying to understand that the Fed is going to be data dependent. So I can't answer how it's going to look like in the future. That's something that is going to be custom and analyzed, but history serves as a really good starting point.
I think we can probably wrap it up here unless anyone has a quick last minute question, just so that we don't take up too much of your time, Larry. But thank you so much for an awesome presentation. I think people got a lot out of this, and we'll definitely have some things that we can discuss on our own and learn from. So thank you for taking this time today. It was really, really an awesome presentation.
I'm glad you guys liked it. And I'm going to have this presentation on YouTube. I'm going to timestamp everything. That way you guys can rewatch specific parts, because this was a long presentation, and you guys can ask questions in the comment section. And once I see it, I'll be able to help you guys out there. Okay. And yeah, definitely follow me on YouTube, follow me on Twitter. And if you've got any questions, definitely reach out to Nick. Nick and I are connected. So I'm happy to connect with you guys there. Okay.
For sure. Thank you so much.
Thank you.
Thank you.
I just have a last minute question, Larry. So what kinds of platforms do you most recommend for just for stock market, just generally? So
I would say Wall Street Journal is a really good start for beginner investors. And once you get more advanced, Seeking Alpha is a really good resource for diving into companies specifically. And I'm a contributor on Seeking Alpha. I tend to write maybe one piece per month, depending on how much time I have. But I would say Seeking Alpha is definitely helpful once you're a little bit more advanced.
okay, sure. Thank you.
And Larry, I'll definitely pass along all of your credentials to everyone so they can check out any other YouTube videos you have or your Patreon if they're interested.
Yeah, sounds good. Yeah, sounds good. Yeah, good luck with the rest of your semester, guys. And hopefully this was super helpful. And of course, stay safe.
Thank you.
Thank you so much.
Thank you.
Now that was certainly a lot of insight and research, and I hope you were able to soak that and take some good notes. And if you did find that valuable, then I am glad and I did my job today. Now, if you are a student in a investment club at your university and you want me to come speak to your school, I'm more than happy to do so. Send me a friendly note at larrychungcfa@gmail.com, and I'm happy to coordinate. Now, if you are a professional at an organization where you're looking for speakers in finance and investments, also drop me a note. I'm more than happy to connect. Now, every month inside my inner circle, I publish timely research insights to help my members stay on the right side of the trade from a directional perspective. If you want to be a part of my community and take full advantage of my research and insights, then I welcome you inside my Patreon. And with that said, I will see you in my comments below and also in my next video. Stay safe.